But I'll start with the problem that we all know. The economic problem is that very few asset classes outperform monetary inflation. If you're trying to beat the cost of capital, the S&P index, it's very, very challenging to do it. And everybody in the world is looking for a solution to this problem. The companies don't have a solution. If the company can't grow 15% a year or more, institutional investors lose interest, liquidity in the stock dries up, there is no options market. And companies are required by normal Treasury rules to use U.S. Treasuries as their capital asset. And if a company is sitting on top of Treasury bills, they're losing 10% of their capital a year. They're underperforming the cost of capital by 10%. $100 billion of capital is going to cost your shareholders $10 billion a year. So companies are, in essence, type 1 diabetics. Every company with the Treasury strategy is a diabetic. You're in essence bleeding capital off your balance sheet. And of course, intelligent CEOs or CFOs understand that. So their solution, of course, is just give away all the money. Like we give away the capital. We buy the stock back and we lever up 144 to 1. Or I dividend it out. But the solution of my wealth is toxic, so I'm going to give it all away is, in my opinion, not a recipe for living happily ever after. And that's what we do to most operating companies. There's a political problem. The political problem is, how do we grow the economy of the United States? How do we deliver prosperity to our people? And how do we overcome a deficit? And all that while maintaining global leadership. So everyone, every institution, every investor, every company, every politician is struggling with these problems today. Bitcoin's the solution. Why is it the solution? Is it the solution? A lot of people are wondering that. Well, I'll put the Bitcoin return for the last 4 years on this chart I just showed you, and you can see Bitcoin is just punching a hole in all the traditional capital markets. This isn't 1 year or 2 years. This is 4 years, but you know, it happens to be the 4 years since MicroStrategy decided Bitcoin was the solution. And you might say, well, you cherry-picked that number. That's the low number. I cherry-picked that number because the other numbers are better, and I'll show you that in a second. If we look at this entire set of asset classes, they line up kind of elegantly. If you're actually holding bonds for the last 4 years, you lost 5% of your capital a year. They're losers. Every bank in the U.S. is capitalized on bonds. Every operating company is capitalized on bonds. You wonder why the banks are sick? You wonder why the operating companies are sick? They're sitting on those minus 5% instruments, and that's their best idea. Gold's plus 6%. You might as well just hold gold. Real estate's plus 10%. The S&P is 15%. You can double it with the Magnificent Seven. Find the best companies in the S&P, the NVIDIAs, the Apples, the Googles. 29%. And this little creature we call Bitcoin is doubling that, 60%. And when you look at that chart, a lot of things become pretty clear. But this is the past 14 years. Bitcoin's not just winning. I mean, it's up 78% in 8 years. It's up 103% in 12 years. It's up 168% in 14 years. It's consistently winning, and at some point, if you look at the numbers, you start to wonder, well, why is it winning, and is this a fluke? And the irony, of course, is that you still get questions from the normies every day, like, well, when does the run stop? It's like, when do nuclear reactors stop producing more electricity than water wheels? You know, when does the airplane stop flying faster than the donkey cart? The answer is it's not going to stop because it's structural and technical. Everyone in the world is searching for an asset uncorrelated to the S&P 500 with higher returns, uncorrelated and performing. It's the holy grail. Banks have conferences on this stuff. Well, Bitcoin is that asset. It's an asset without the counterparty risk that comes from competitors, countries, corporations, creditors, cultures, or currencies. Everything else you own in your life has a counterparty risk to one of those items, except Bitcoin. Bitcoin is, in essence, orthogonal to the rest of the market. That makes it alpha. But you don't have to believe it from first principles. You don't have to study it. You can just look at the data. This is fidelity data. It's showing the lack of correlation and the Sharpe ratio. It's got the highest Sharpe ratio. It's got the lowest correlation. So even if you haven't read the book, The Bitcoin Standard, even if you haven't thought about it for 100 hours or 1,000 hours or 10 hours, all you have to do is just run the numbers. The market is screaming at you that it's an uncorrelated, high-performing asset.